to Forex and you're wondering, what is this thing that people are just clicking buttons and making money off their phones? Guys, this is not luck or gambling. This is not a scam or get rich quick scheme. This is a technique or a skill that you guys need to master if you are interested in mastering it. Because remember, you are coming onto the market by choice. And I've always liked this quote, and I think I've said it in the first video that I've posted on YouTube, is the market is a drunk man, and we take advantage of the market when it gives us an offer that we want to go into. We look at the market as if it's a drunk man, and we deal with it when it gives us the right price. So what is Forex trading? In this video, I'm going to teach you how to go from 0 to 100. This is the only video that you're going to need. Cancel all the noise in YouTube. Cancel every single video that you see on YouTube and go straight to this one. I know I usually recommend people to go to different videos because this video was not released at the time, but this is the only video that I suggest that you approach or learn from as a beginner. So let's get into it. Let's start our journey, and at the end of this video, hopefully I will give you a full lesson and you will get a perfectly good understanding of Forex trading. This is going to be a very helpful message or a very helpful video for the people who come to me and ask me, Ken, how do you go from a complete beginner to a profitable trader? Because they want to make profits as good. They want to make profits like this, but they don't know how to start. They don't know where to begin, and they don't understand anything. If you don't understand what's up, if you don't understand market movements, if you don't understand price action, this video is going to cover it all. You don't have to worry about anything. And at the end of the video, I would show you how I make a setup and how I actually. What is Forex trading? Forex trading is basically betting whether the price of a currency pair is going up or down. And I'm saying betting, that doesn't mean that I'm saying gambling, because gambling is basically relying on luck. And betting, what are we going to do? We strategically bet whether the price is going to go up or down. So when I'm saying currency pair, there are different types of currency pairs. There's GBP USD, there's Euro USD, there are GBP JPY. There are different types of currency pairs, and the most popular is Euro USD. And this is because that these are the most two used currencies in the world that are traded amongst each other. So what are we going to focus on in the Euro USD? You can probably make much more money than you can make in stocks, and it's much more cheaper. In the Forex market, there's actually $9.6 trillion moving every single day, and the stock market compares nothing to it. So what are we going to be focusing on in what is Forex? We're going to be focusing on what is candlesticks and what are candlesticks. These are Japanese candlesticks, those small bars that show up on the actual chart. These are candlesticks, and they can either be bullish or bearish, green or red. So you can change the color of your candlesticks, but I advise you to keep it as green and red. So green means that the candle actually went up, so we call that long. In Forex, we call that a long position or a long. We say that we are going long. If we place a buy, we say we are going long on that particular currency pair, and if we are selling, we say we are going short. And you would see the short and long tools on TradingView, which 99% traders use TradingView to analyze the charts. So there's two types of ways to analyze this: a fundamental way and there's a technical way. The fundamental way is basically you are relying on fundamentals. These are political, economic, or social events that are going on globally, and these have an impact on the market. I don't advise using fundamentals, especially when it's not on news days like NFP or CPI. NFP or CPI, I will explain what is that in the description below. There, I'll send a link to the Forex Factory. This is usually where we're gonna check our news in this link. So guys, what is Forex and how do we make money from it? We are going to trade with the trend. Remember, I said that there are long positions and your short positions that we are going to take. So just say we have this currency pair, Euro USD. The Euro is the base currency and the USD is the core currency. So how are we going to make profit from this? So we have price on the right hand side of our chart. We are going to bet whether the price is going down. I know I might sound like I'm being repetitive, but here is the point that I am going to make. Now we are going to bet whether the euro will gain more strength than the United States dollar, or will it be weaker? If it's weaker, we are going to sell, and if it is stronger, we are going to buy. We are not owning the euro, we are not buying the euro and selling the dollar. We are, that's if we're taking a long position, we are not buying the euro and selling the dollar. We essentially betting that the euro will be stronger than the dollar. Okay, so now I will be going on to the next section of this video. Next section, we are going to talk about perhaps a lot of traders get so fascinated when they begin trading. I was one of them. That we learn so much about things that we don't need to learn about. So basically, pips are the small price movement on the right hand side, as I said. And I know when I flip the camera, it's probably going to be on the left hand side. But if you look at the right hand side of your chart, you would see that the price has decimals, and these decimals are usually calculated as pips. So these pips are what the broker is going to use to decide how much spread they are going to take. And the spread is basically when somebody sells you for, let's make an example. Somebody wants to sell you a rand at a dollar at 16 rand, okay? Someone wants to sell you a dollar at 16 rand. So the broker would sell it to you at 16 rand 50. So that 50 cents is how much the broker took between you and the transaction, because the broker connects you to the seller. So if you want to buy, the broker connects the buyers and the sellers, because remember that's how forex trading works. It's foreign exchange. We are exchanging a dollar for a rand. Okay, now what are we going to do with these pips? We are also going to use it, besides a broker using it to take a spread. We are going to, and make sure that you are trading with the right broker and you're trading at the right times. I'll advise you to trade in London session. There are 3 types of sessions. There's London, New York, and there's Asian session. I advise you to trade in London session. That's when the market is moving with big movements, and this is when spreads are usually lower. And make sure that you trade with the right broker so your spreads can be lower. If you want to trade with the broker that I trade with, you can look in the description. That is the broker that I trade with. So, and that is the only broker that I trust at the moment. Maybe I will find a better broker and I would update you. So guys, how are we going to use the spreads besides the broker using it? We are going to use the spreads to calculate our stop loss or our take profit, because we don't want to over risk our account and end up blowing our account. So besides using these pips to not blow our account, there is another crucial element of trading that most traders overlook, and they overtrade and end up blowing their accounts, and this is lot size. I would advise you guys, I know that a lot of you all trade on demo accounts, and when you trade on a demo account, you're not attached to the lot size. You do not feel like this lot size has that much effect. But if you slowly just go onto your demo account and adjust the lot size and take different trades, you will notice the big difference. Lot size is basically how much you want to risk. So if you want to risk more, or you want to increase your lot size, you will risk more and win more, obviously. But if you want to decrease your lot size, you will risk less and you will obviously win less. So there are ways to change your lot size or use the same lot size as other forex traders, but with a different type of account. So yeah, and the broker that I use, there's a standard account, there's a micro account, there are micro standard accounts. So these are the types of accounts that will change the type of lot size you have. Even though you have a 0.1 lot size on a standard account and you take a 0.1 lot size on a micro account, you will probably be making like 10 times less the profit on a micro account, because micro accounts are usually for beginners. So I would advise you, if you're a beginner, deposit at 350 or the minimum deposit that it is currently now. Last time I checked it was 330. Deposit that and trade with a smaller lot size and get used to the actual market. Try to shift away from the game. So besides the lot size and the perps, we are also going to be focusing on leverage. Leverage is something that can be overused or something that could brokers actually, there are a lot of brokers that trick you into blowing your account by giving you a lot of leverage. Leverage that I advise is 1 to 100. When you are signing up for the broker, you see an option that's leverage. I would advise 1 to 100, not 1 to 1,000, not 1 to 50. So they're basically borrowing you this money for you to take positions. So if you want to take a position that your balance can't allow for, you will be going into leverage. This is not money that you have to pay back. This is the broker simply helping you to take better trades. So if you were to, and you take trades with your margin, not with your actually with your balance. So you see how much you take, how much the trade costed you by your margin. Okay, so with your leverage, you are going to aim for 1 to 100, because 1 to 1,000 is absurd. This is you taking trades that you can't even afford, and then it will blow your account by the slightest of movements. So make sure that you're using the correct leverage. Make sure that you are using the correct lot size, and make sure that you are calculating your TP and your stop loss. I will usually, when it comes to calculating your TP and your stop loss, I would usually tell you to aim for a price of 1 to 3, or a risk to reward ratio as 1 to 3, or lowest 1 to 2. Please do not try to go into the market and trade a risk to reward ratio as 1 to 1, because remember that your win rate could be less than 50%, and you could still be profitable if your risk to reward ratio is 1 to 2. So let's try to aim for 1 to 3, just to make sure that we are profitable with our trades. So how do you actually get in touch with this Forex market? Do you call Wall Street and you tell them that you want to exchange stuff? No, you're gonna go sign up with a broker. Again, the broker that and I'm not even sponsored by this broker, so this is just me plugging. So you go sign up with the broker that I use. This will connect you to the charts. So how do you actually get the charts on your screen? You'll download MetaTrader 5 or MetaTrader 4. I'll advise you to download MetaTrader 5. There's really no difference between MetaTrader 4 and MetaTrader 5. It's just that MetaTrader 5 is just more precise. It's just more like a cleaner version, like an update. But it's basically the same thing. Do the same thing. So download MetaTrader 5 on Play Store or whatever app store you use, and then you want to go, and in the beginning you would see a chart, right? After you make an account, so there would be a chart, and there are 2 bars on the top. There's a bar with a circle, and there is a bar that has just a dash in between. So you're going to tap that bar so you can have the buy or sell on your screen. So this is where you want to execute trades directly. You want to execute trades immediately. As soon as you see price doing what you wanted to do, and you want to buy or you're going to sell, you're going to take a long position or you're going to take a short position at that moment in time. It will be instant. I advise people to trade this way. I do not advise you to place sell stops or buy limits. I do not advise you to do any of those types of trading. But what is it? Having a sell stop or a buy stop, this is when you want the price to go to a certain position, and when that price is at a certain position, it will buy or sell as you ordered it. But I don't advise that, because as I said, I will show you how to analyze candlesticks, and at that position, the candlestick cannot be in the direction that you want it to be, and then the market will actually behave in a direction or behave in a way that you wouldn't like it to go, and you will end up making a loss. So I'd advise you to be on the market when you are actually executing trades. So a big misunderstanding between beginner traders and this, I cannot stress it enough: psychology. Psychology was things that even profitable traders struggle with sometimes, especially when you have a group like me, where you are actually taking trades for beginners, and when a trade goes into a loss, you feel it just as if you are a beginner. So you feel as though the world is ending. You feel like you are unprofitable, like you want to hang up your gloves. And I'll tell you that psychology is something that you need to master if you want to know how to trade Forex and you want to actually become a profitable Forex trader. Psychology is the goal, the main skill to focus on. You need to know that, okay, when you're in a loss, now you're gonna be hopeful. The price is gonna bounce back. The price is gonna bounce back. So you want to take more positions. Relax. When you are in profit, you are stressing. You are thinking, damn, the price is gonna go back down. It's gonna go back down. I'm gonna go back into a loss. These are all problems that people with low psychology suffer with, and this is something that I used to suffer with before. So I always used to think when the charts is actually in profit, I used to think it's gonna reverse on me, especially when you're trading a high volatility currencies like gold, not currencies, index like gold, or future like gold. This would fuck with your psychology big time. This would make you think that you are a trash trader. This will make you think that you're terrible at trading. But in reality, you're not terrible at trading. It's just that your psychology. I would advise you to just, if you want to pay attention to the money side of it, I would advise you to take a trade on your live account and then just switch to your demo account. And once you switch to your demo account, take the exact same trade on your demo account and just analyze it on the demo account. But that's not before you put your stop loss and take profit in your live account, just to make sure that it doesn't blow. So when you're on your demo accounts, you can analyze the chart, you would see if you're in a loss or you are in profit, but you wouldn't know how much profit or loss you're in. And also, don't put a take profit or stop loss in your demo, so you wouldn't see how close you are to your stop loss, you wouldn't see how close you are to your CP, and this will help you. It'll show you where your entry is, but it wouldn't show you how much money you're in loss. It wouldn't show you how much money you're in profit. So it would make you go back to those days of you having a demo account where you're not really attached to the money. So that's my advice. So after this, I would be teaching you how to trade live, and I would take a live trade and analyze that and show you how to analyze the market and take a profitable position. So guys, now we are going to talk about a technical analysis. I know that I said we are going to talk about my setup, but now we are actually going to talk about a technical analysis, and then I am going to show you my setup. So let's start like this. There's one important thing when it comes to market structure. There are only two types of market structure. It's bearish or bullish. Something to remember is bullish is up and bearish is down. So right now I drew what type of market. That is a bullish market. Okay, now we're going to focus on a bearish market, a market that looks like it's going down. So we have a bullish and we have a bearish market. How do we determine if the market structure changes? So let me show you how we determine if the market structure changes. Just say we have a bearish market and the market decides to do that. Now we know that it's a bearish market if there are lower lows and lower highs. So let's focus on the bearish market for a minute. Here are your here are your lower highs. Yeah. So bearish markets are made up of lower highs and lows. Okay, so as soon as this lower high is broken, when we're talking about a bearish market, the most important thing is the lower highs. Okay, and in a bullish market, we are going to focus on it in a minute. The most important thing on a bullish market is the higher lows, and I will show you what are higher lows. Okay, as soon as the lower high in a bearish market is broken, because remember these are lower highs, so it all starts with lower, lower, lower. These are lower lows, lower lows, lower lows, because it's going down and it's a bearish market. So as soon as the lower high is broken, then we have now a bullish market. So let's go to the bullish market. So yeah, the most important thing is the higher lows. So it's going up higher and we're focusing on the lows. Right, so as soon as the chart decides, you know what it wants to do? It wants to go in a direction like this. It decides it wants to go down. So then if this higher low is broken, this is now a bullish market, a bearish market, excuse me. So now let's focus on trends, because remember we only trade with the trends. So let's focus on trends. How do we mark trends? If the market touches the trend line that we are about to draw, if the market touches the trend line twice, we can consider it to be a trend and we wait for confirmation. But if the market touches the trend line 3 times in a row, then we know that okay, this is a definite trend, this is a certified or verified trend. So we trade with the trend and we trade with market structure. One thing in trading we can do, we can trade against the trend according to liquidity, and I explained that in my previous video. If the liquidity and the resistance and support have more influence on the market, then we can go against trends. But we cannot go against market structure. Never ever go against market structure. So if it's a bearish market, sell. If it's a bullish market, buy. Don't ever sell in a bullish market and don't ever buy in a bearish market. So what type of market this is, right? We can see that it's going down. We can see that the lower low is broken, so it confirms it's still a bearish market. So we are waiting for confirmation for a trend. So let's go and put our trend line. We only got 2 points, so let's go for 2, right? So we identified that this is a bearish market, right? So now we are going to clone. I actually learned this from a crackhead. I learned that you should clone and then you should use your clone, bring it to the other side. The market usually almost tries to replicate it. So, and this can also help you determine the trend if there are a lot of movements that looks like it could be a trend. So you could actually duplicate what you have or clone what you have and then bring it to the opposite side. If it's a bearish market, then you would bring it to the lower lows and try to verify if it's a trend. Okay, so let's try to verify if it's a trend. Let's see how it reacts to the trend line that only has 2 touches. Okay, now it's touched, right? Reaction, as we can see, there is now a bearish engulfing candlestick. And let's not now, as you can see, the market decided it's going to drop. Now where is it going to drop to? Now we are going to place our order. We are going short. Remember I spoke about short positions and long positions. Now we are going short. As soon as you can see the lower low is broken, now we expect the market to drop to, let's put our stop loss just above the lower high, because we know as soon as it goes to the lower high and it breaks above it, what type of market would it be? It would be a bullish market. So are we going to sell in a bullish market? No, we never ever go against market structure. So let's go risk to reward ratio. Let's bring it a little bit lower just to make sure that we add our 1.2. We're still round about the lower high. So let's make it pay out and see where let's go straight into profit. Let's see how far down does it go. Okay, it does not go and hit our take profit, but we have a relatively 2:1 trade, and yeah, that is how we take positions when it comes to trend lines and on a technical analysis.